Welcome to the Better Off Bonus Call of the Week. I'm Jill Schlesinger, your host. You know, this is our little extra segment. It's so much fun because it's a bonus question, real people just like you, and I get to answer that question. Remember, I'm still a CFP, even though you might see me on the CBS Evening News, okay? So I still got some street cred here. If you have a financial question, all you have to do is send us an email, askjill@betteroffpodcast.com. We'll arrange to get you on. And don't forget, this Thursday, a brand new episode of Better Off, sponsored by Betterment. Okay, let's get this party started. It's Brian, who's on the line from Seattle. Brian, what can we do for you?
I have about $300,000 in a Roth, and I don't think I'm ever going to need to touch it while I'm alive. And I'm trying to figure out the right thing to do in it, what to invest in it.
Mm-hmm.
I'm 52, so I'm assuming that it'll be a long time before this IRA passes on to my two kids.
How come you don't need this? How come? I mean, what else is going on in your financial life? What is it that makes you so sure you won't need this money?
I've been really fortunate. When I was younger, I was working a whole lot, and I was self-employed, and I managed to, I think, make enough so that I don't think I'll miss this $300,000 in the Roth IRA if I just didn't have it.
Okay. And so in your mind, you would be investing for your kids, right?
Right.
Okay. And presuming that you did not need to touch this at all, and I said to you, well, you've got a 50-year time horizon. What would you want to put in this account?
Well, that's what I was thinking. It would seem that normally for a 50-year time horizon, I would stick it in really heavy stock index fund or a couple of stock index funds and just kind of leaving it at that.
So let me ask you a real, like, this is for real though. Do you have the guts to ride it out? Will you be able to push it aside in your head? Because you're going to look at your stuff and you've got other money. And I know when I say 50-year money, it's sort of a setup because, yes, of course, everyone has long-term assets and everybody's investing for the long term. But it doesn't mean you don't panic when you know what is hitting the fan. And so do you trust yourself not to mess around with it?
I think so. In 2008, I watched it all go all the way down and just watched it come all the way back up again.
Uh-huh.
So.
I get that. I think that would be kind of a cool investment strategy. What's in there right now?
So right now I've got it in like a Fidelity Total Bond Fund, Spartan U.S. Bond Fund, and also a Capital and Income Fund. So it's mostly income producing, low-cost mutual funds.
Mm-hmm. So when we think about it, if you really could put it aside and you don't even, and almost, I would recommend for you to, if you were going to take this on, that you literally stop looking at it even under a consolidated basis with your other assets because it's going to move around so much and it might drive you a little nutty. I kind of dig that idea that, how old are your kids?
17 and 14.
Okay. I mean, so I kind of love the idea that if I were the guardian of those kids, right, and I were investing their money, what would I do? I wouldn't have zero in bonds. I wouldn't say zero because I think that that's almost sort of like a silly notion. It's 100% stocks. But I would say aggressive growth is appropriate for a 14 and a 17-year-old, right? And so then I would have probably a broad U.S. stock index, an international index, and then, whichever fund, I mean, I guess you could just use the Spartan bond index, maybe just put 15, 20% in there and leave it alone and really don't touch it. Okay, that's a wrap of our Better Off bonus question of the week. If you've got a question, it's simple. Send us an email at askjill@betteroffpodcast.com. We'll arrange to get you on. And don't forget, in just a couple of days, there's a brand new episode of the Better Off podcast sponsored by Betterment. Talk to you then.